Maverick traders. Welcome out to your market roundup. It's September 9th. Corey here with you. Let's jump in. So we're going to take a look at meaningful news in the markets. We're going to look at some sector rotation. Certainly today there was a nice bounce in the market. We talked about this over the weekend in the trading room, that the most common dynamic after a big flush lower is a little bit of an inside day. And then we'll talk about some bullish and bearish setups.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was a bounce back day, and that's not uncommon after you had a nice, well, the worst week, a big flush to the downside last week, which was the worst week of 2024. You likely get some give back. And I did the trading room over the weekend. I talked about that the most common dynamic is a harami, a little candlestick that fits inside of the prior day's candle, and that's exactly what this was. So markets fell a couple of percent on Friday, rebounded back, half or so of that. Dow up 1.2, S&P, NASDAQ right in that same range. The Russell and the widespread rally was not there. Russell stayed pretty flat. Oil with a bounce back up 1.5, gold pretty much flat. So we got that bounce back. Other news, Apple launching some new products, talking about iPhone 16s and this and that. Certainly we saw large cap tech and some of those key components more on the upside. Advanced decline line, about 2/3 of stocks advancing, and the 50-period moving average is about half and half. It kind of suggests we're in a sideways market. Nobody has clear control. 50-day moving average is floating sideways. This is not a strongly trending market. Right now, we are in a sideways consolidation. So as we look at this chart and we try and make sense of it together, you really had a missed opportunity for the bulls. We had this resistance, we had the retest, and there was a possibility for a mild pullback and then an advance, right? The kind of cup and handle. That really failed last week. And if we were to think about last week, the 5 candles that made up the week, here's your bearish candle from last week. So if we make a weekly candle, that's basically the bearish candle, right? It's this big red candlestick. So did you bounce back to start this week? Yeah, a little bit. But given how much we fell last week, this is a mild bounce. But again, I think that's kind of where we're at. You can see these moving averages just kind of sloping sideways. And I'd expect some back and fill, some choppiness in here in the short term. Ultimately, I think we make another leg to the downside down here. But do we get that choppiness first and then the push lower? That would be most common, right? Last week's decline, you get a little bit of a give back, maybe push up into those moving averages, and then another leg lower. NASDAQ really pinpoints this as well. You'd have to say the NASDAQ's worse than the S&P, and there's so many leadership names here that have faltered. The Amazons, Googles, all, Nvidias, Apples, etc. So where's the NASDAQ at? Well, even with a rally, it would still look like a bear rally short, meaning we just made lower lows. Even if we rally, we're likely to make lower highs, still be below the moving averages, and another leg lower. The old zigzag to the downside seems more likely than a strong upward push. Time will tell, but the bears seem to have slightly more control. Still kind of a sideways market. It's not a strong trend, but slightly more control in the bearish camp. So like I said, today was really a nice bounce back day for the large cap names, the Nvidias, the Amazons. Tesla was up nicely. Broadcom. You did have a little bit of lagging performance in Microsoft, Apple, and Google, but ultimately pretty good price action overall. Certainly financials were strong, Energy with a bit of a bounce back given the bounce back in oil prices. So more of an up day. Well, that's no surprise. Markets again had a 1% up day. Now we're still below the 20 and 50, but the way I see this is it's in this category of 0 to -1. It's not a big bear market, it's not a bull market, but it's just sort of shaded in the light red. Weekly outlook, I'd expect a little bit of a bounce and then the push lower. That's ultimately how I think this plays out. Is another push to the downside coming? Yeah, probably not too far off. So let's think about some names. We've got some bullish charts, we've got some bearish charts, and here I'm just looking for patterns and opportunity. So take Trade Desk. This symbol is TTD. You have the resistance up here, and it kind of pushed. Stocks will either stop just short of or just above the resistance, but this is basically your retest of the resistance. Here you have the cup, there you have the handle, and whether you call this a cup and handle or you draw it more like this and it's an ascending triangle, the idea is that this little pullback is the pause and the correction that sets off the next leg to the upside. TTD, if it can hold at this level, looks very nice and very bullish for a push up into the higher 100s, right? 109, 110 per share, something along those lines. Now, it's still an if we were to just plunge and break below this level tomorrow, I would be less inclined. I would frankly not enter into a trade. So we need to hold here. I'd love to see maybe tomorrow a nice doji or something and then a pivot to the upside the next day. Give us a little bit of a turn, hold this support level, and it looks pretty good as a bullish candidate. Uber, very similar. You've gone back up to the prior resistance. You can see the big dip, the smaller dip, and the pullback into those moving averages. If it breaks this level, all bets are off. If it holds here and pushes to the upside, we would look at that as a more bullish candidate. This chart is better than most, something that would look more enticing for a potential trade. Now let's move to bearish candidates. Well, Micron, you basically have a little bit of the inverse relationship. Here we're back to the low of the price action. Does it bounce here temporarily? Probably so, but the bounce should be mild. If you were to do the math on a cup and handle, usually the handle will be about 30% of the size of the cup. So if you go 110 to 85 or so is kind of the size of the cup. If we take, that's 25 points, 30% of that would be about 750. So if you bounce from 85 up $7.50, it's about 92.50. So kind of where I drew this in, just a little bounce up to the low 90s and then another push to the downside. Put Micron on that watch list for potential bearish trades. And then Wells Fargo, this is one where you can just probably jump on the train at the best possible spot because it looks to me like this is going to work its way down towards the lower end of that range. This one less about the chart pattern and more about these levels of support that had been here in the past have been broken again. These mild bounces are likely to see more selling pressure. So another push down there into the low 50s seems like the path of least resistance. And since we're in the mid 50s, that leaves some meat on the bone and some potential for profitability. So markets bounce back today. I think we're in this little consolidating mode, but my next bet is that there's another wave of selling that comes in and hits the markets. We've got CPI on Wednesday. We've got the Fed meeting a week from this Wednesday, and those rate cuts are coming. Again, I don't think that's the savior of the markets that everyone wants or hopes it to be. Adobe, GameStop, Lennar, a few companies still coming through. Earnings season has mostly passed, but there will always be a few more earnings results piling in. Thanks everyone for being here. Have a great week ahead. We'll see you next time.